Hey guys, welcome to the channel and welcome back to another video. All right, guys. So on today's video, we're going to be having a conversation as in and appreciate you being here. If you're here for the first time, do me a favor, feel free to subscribe to the channel. And if you're here not for the first time, cool. Whether you're here for the first time or not, let me know where you're chiming from. What city, what state, what country, what continent. All right. So, guys, we're going to be having a conversation today about money, 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 money. Now, we named today's show, This is Exactly What to Do to Reach Your Financial Freedom as soon as possible. As soon as possible. So I appreciate you guys being here. Kind of changed my setup around a little bit. You can see I'm kind of looking up at a bigger monitor right now. So I sort of changed my setup just a little bit, but the content is still the same. So, John, good to have you in here. Good to be here with you as always. Let's see here. It's 5 o'clock Central Time. To you, RC. Glad you're here to catch the live. If you guys can hear me, I got a thumbs up. Appreciate you. North Carolina's in the house. Daryl, good to have you. And hey, Mrs. Moore, good to have you as well. Kenny is here. Good to have you. We got Rockford, Illinois. We got Oskaloosa, Iowa. Good to have you in here as well. Let's see, Pamela from Atlanta. Hey, Pamela, good to see you as well. Glad to have you in here, and thank you for being here. So we got a number of folks, guys, and I'm going to actually do a little switcheroo up here. So bear with me as we get all of our stuff in line up here, right? And you're going to see me looking back and forth to the camera and back and forth up here, etc. So we're just going to do it a little different. That's cool. Good to have you guys here. Let's talk about how to build wealth. Exactly what you need to do to reach your financial freedom as soon as possible. Okay. Rip those off real quick. So we got them from all over the country, guys. San Antonio, LD, good to have you here. LD Sims, good to have you. Appreciate you being here. I'm going to talk to you about the different levels of financial freedom. Okay. In my opinion, and how I look at this, guy, financial freedom is up here, and we've got to do some things to reach that financial freedom, right? So I want to go through a process. It's not going to be a terribly live long, guys. It's going to be sort of straight to the point. No, I kind of had to get some of these things out the way in the beginning, but that's okay. So we want to talk about these levels of personal financial, to build a personal financial foundation that's strong, that's impenetrable, right? That job loss can't get through, that somebody crazy in the family can't get through, right? Sort of a strong foundation that cannot be rocked, right? If something goes wrong, it's able to be withheld and it can withstand whatever's thrown at it, right? For you and your family. These levels is kind of equated to when you're building a structure, a home. Let's say you're building a home or building, right? There's work that goes on at the bottom level, right? The bottom level being the foundational level that has to be solid and strong, right? So, what I'm going to talk to you about today is how to build that strong, solid foundation. We're going to go through these different levels that you want to make sure you're at, right? That you can be at. Now, a lot of times on Thursdays, I'll come around and I'll talk about the Federal Reserve. I'll talk about what's happening in the with our economy and all that stuff. But I say, you know what? This time, this Thursday, let's talk about us and what we can do for our own personal financial situation. Appreciate that. Somebody said, I like the hat. Hey, from Atlanta. I like the hat. Appreciate you. Yeah, this is the Negro Leagues, right? Baseball. Negro League. Let's see here. Bronx, New York is here. Good to have you, O'Brien Ortega. And hey, we got South Carolina here too. Ricky, good to have you. So I want to get into these 5 levels, guys. Let me do a little bit of housekeeping for about 1 minute. All right. Thank you for being here first and foremost. In the description, there's links in the description box. You can go through those links. Okay. There's the 24 Laws of Money free ebook that's down there. Got a link to my one-on-one personal financial mentoring and coaching. Got a link to my schedule. It's in the description box. Got a link to Mint Mobile, my partner on most of my videos, right? Recently bought out by T-Mobile, by the way, which really is a good thing. T-Mobile's been in the talks with Mint Mobile for quite a while. But now Mint's connectivity to T-Mobile's industry leading 5G network is solid, right? Solidified by the recent announcement of the buyout. So good stuff right there. Again, hit the like button as you come in. Share the link if for anybody that wants a basic foundation of how to actually reach financial freedom, and then subscribe if you're not a subscriber. So I wanted to put those things out first and foremost. We got Atlanta's in the house. Good to have you, Hucklebuck. Good to have you in here as usual. Save, invest, educate, repeat. Done. Boom. Brian, I like it. Love it. Let's jump into it. Okay, now I'm going to give you these things, but then towards the middle here, I'm going to give you some caveats that you got to make sure you're doing the whole time. Okay. I always get this question. I get it from people who they don't like somebody else, right? And they tell me, "Hey, I don't like what so and so says. So what do you think about XYZ?" And this is kind of the culmination of how I feel about a lot of the comments I get in terms of would you like for instance, today I put out a video that said, "Hey, should I stop investing while I get out of debt?" Right? That was the video that I put out. And in that video, I said very clearly, "No, no, no. Do not stop investing while you're getting out of debt." For some of you, that's different from what you may have learned or heard or grew up thinking, or in the last couple of years, you heard somebody tell you different. That's cool. I'm not mad at you. I'm not mad at them. I'm telling you what worked for me and why it worked for me. So it's a little different. Level one, let's talk about it, guys. Let's see where you are. Level one, hey, you got somebody from Dallas, Raymond, check it in. Good to have you, Dallas. Personal finance is personal. The things that I give you in this video or I ever talk about in any video is going you have to fit it to your own personal situation, right? You've got to fit it. The first thing I tell everybody to do to build a firm, strong foundation, this is the first thing, is you have to be doing a budget. Now, I know there's some conventional wisdom out there that says, don't be doing a budget. You don't need a budget. Budgets stink, right? Whatever they want to say. And people do that, by the way. People do that to get you to click or to get you to listen because you say something shocking. But I always tell people you gotta start with a budget because you gotta start taking inventory of where you are, of what you have, and of it's the organizational piece, right? Because a budget is gonna help you get organized. Listen, you can't fix a problem if you can't even pinpoint the problem. You can't fix a problem if you haven't taken out the moment or 2 or 5 or 10 or 20 minutes to look at your problem on paper. When I do one-on-ones with people, one of the things I like to do is I like to put stuff in a spreadsheet in front of their face. I'd like to put your personal financial monthly situation on a piece of paper in front of you. Well, in this case, it's gonna be Excel sheet or Google spreadsheet, right? Why? Because when you start to see your situation on paper, things start to click. Emotion leaves the room. Common sense, rational thinking, right? Just thinking in general comes into the room, right? When you see it on paper, you're able to see your situation from a different perspective. You're not you take yourself and your feelings out of your situation, and you're more objectively looking at your situation when you do a budget, when you put your financial life on a piece of paper, on a spreadsheet. Now you say, "Wow, okay, I didn't know I had all that money left over at the end of the month. What? Wait a minute, that doesn't make sense. You mean all of my subscriptions plus my hair and nails, plus my all that equals that I'm spending that much each month? Look, more than 50% of people in America and around the world really don't do written budgets. Because if they do written budgets every single month, their behavior may change. So my very first thing that I want you to think about doing is putting your financial monthly life in a spreadsheet or on a piece of notebook paper, whatever. I don't care if you do it on a napkin, but this is the base, right? I like a zero-based budget, right? The business sense of a zero-based budget, and the zero-based budget it was adopted by businesses back in the '70s. It said you spend all your money for your business on paper first. And so now in the last 15, 20 years, people that are in the personal financial space have said, "You know what? Now you need to go ahead and do all your budgeting for your home on paper and do it down to the penny for every single dollar." Now you may be saying, "Hey, wait a minute, things come up. I didn't know this come up. This cost that much." I like to say that when you do a budget, you can also leave a little cushion, but put that cushion in a account called miscellaneous on your spreadsheet, right? But you gotta do a zero-based budget every single month. You have to make sure you tell every single piece of money that comes through your hand what you want it to do. Why a budget? Again, you gotta get organized, and you gotta get a sense of control over what you bring in. The budget does that. Now, I'm not talking about a vague budget, because 'cause I've seen some folks do up a budget for their own money every single month, and it's really, really vague, right? It's not specific. I'm talking scrap all that, forget all that. I'm talking about a very, very specific budget. If I go to you and say, "Hey, how much January for food?" You can go look at your budget and see, "Okay, this is what's on there for food." You know what you spent. "Hey, what's on your budget in terms of your, all of your subscriptions?" You know, your Amazon Prime and all your, YouTube TV or whatever you got, right? Your Pandora, Spotify. How much you pay for all your subscriptions in the month of February? You ought to be able to know that off the rip, right? That's why you wanna have a budget, because you wanna be in the habit of assessing and analyzing what you bring in and what you send out. You wanna be in the habit of taking a critical look at what you're spending versus your income and what you're bringing in. The budget also sets up guardrails around you to say, "Up, that's out of the budget. Up, that gotta stay in the budget," right? And you may say to yourself, "Man, that this is such a horrible way to live." Listen, if you wanna build a strong foundation, you gotta tighten up the reins, so to speak, right? I always compare it to a sloppy room, right? When you walk into a sloppy room, stuff is everywhere, all over the place. The room looks smaller. As soon as you begin to put stuff where it goes and organize the room, you have more room. Same thing with your money. When you organize your money, you likely will have more money, right? Budgeting, don't listen to these gurus that tell you, you don't "Nah, don't do a budget. Budgets are nothing." No, you need a budget because it's about self-discipline. The first thing you gotta get control of, if you wanna control your money, is getting control of you, and a budget helps you get in control of you so that now you can be in control of your money, right? People just let money bully them and beat them around all the time. Don't let money be your biggest bully, whatever you do, right? This is the first piece of this foundation we're building, right? This is the first piece of concrete, the first level, the sub-level, building the strong foundation, right? Building up your discipline with your money, building up your control over your money, right? Let's see here. Somebody said, let me go back to the chat here, guys. We got we'll get there. Zach, we're gonna get there. Mommy Trader in the house. Good to have you guys. Check out her channel, Mommy Trader. She's got a YouTube channel. She's in the chat. You can see how to spell that. Feel free to check her channel out. Doing a good job. Congratulations to you for growing. And I saw a video about buying a rental property. Congratulations on that piece of rental. I think it was commercial real estate. Check out her channel. Jackie from Florida, good to have you here. So that's the first level. Let's stay there, budget. Second level, level level 2 is you gotta have a little bit of cushion, right? I do not wanna listen, I really, 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 really don't wanna see you having to go get a payday loan because, the stove went out in your home, and or you gotta get a new microwave. It costs 2 or $300, $400, whatever. You can't cook, or you gotta pay this light bill that's coming up and you right? And you didn't know it, but they charge you an extra $200 or $300 on your water because you had a leak in the toilet was running and you didn't know it was running. So now you got a $400 bill or else they're gonna cut your water off next week. That's an emergency, right? So when you have an emergency, you gotta be able to pay for it. And how do you pay for it? You pay for it with a small just a small starter. Now, I know you're saying, "Well, that sounds like Dave Ramsey, right?" He says the same exact thing, but guess what, guys? But guess what, guys? It ain't Dave Ramsey because Dave Ramsey says you put $1,000. I say that's crazy. This is 2024. You don't need $1,000 set aside in case something go wrong. What worked back in 2002 doesn't work in 2024. I think you need at least 2,000 to $2,500 in some type of emergency fund as a piece of your foundation. You're trying to build a foundation that you cannot be toppled from, right? Very rarely do we have emergencies in our lives that go over $2,500, right? You can easily have look, you bust out 3 tires off your truck, that's more than 1,000. But 2,000, 2,500 can handle if you bust out 3 tires, you ran over some type of crazy thing on the highway. Look, you can do that with a couple $1,000. So my thing is 2,500 bucks. If you're not really, really comfortable with 2,000 or 2,500, save up 3,000, whatever. You gotta get some type of emergency money there in place so that you can be prepared. Things happen. Now listen, here's the kicker. I don't care where you have that money. I said it. I don't care where you have that $2,000, $2,500. You have it wherever you wanna have it. I don't care if it's in a high yield savings account. I really don't, because you're not we're not trying to invest with that money. Sure, if you wanna have it in a high yield savings account, great, do that. If you decide you don't want to, because you have a banker friend down the street, whatever, doesn't matter. Just have the money somewhere you can get to quickly. Now, yes, I would love to see you go ahead and open up a SoFi account or something like that and put it in there so that after a year or 2 of it being there, you might have a few $100 more. Great, do that. I'm okay with that. The other thing I wanna explain to you about this foundation is this is just a guide, okay? Personal finance is personal. What you do in your situation, you may be in a situation where you say, "Look, everything costs more where I live." Right? I live near downtown Boston or downtown Seattle. I live in LA, Inglewood, right? You may say, "Okay, $2,000 cool if you live out in Kentucky, but I live in downtown LA, I gotta have $3,500." Look, you fit these pieces to this, foundation to fit you and your situation. I'm not gonna tell you point blank $2,000. Imma tell you 2 to 3,000. Somewhere in that range is where you could be in terms of an initial emergency fund, because I know that every listen, if you are sitting in Mississippi right now, you're in Meridian, Mississippi. Let's say you're in Batesville, Mississippi. You're in Batesville, Mississippi. You don't need what the person that's sitting in, New York, maybe up in Brooklyn or something, you don't need the same things that Brooklyn need, right? So, it's a little bit different. You tailor and mold this foundation to fit the soil where you're at. That makes sense? You're tailoring this foundation to fit the soil where you're at. You may be in Argentina, you may be in UK, right? There's very few things that are one size fits all. There's concepts that are one size fits all in finances, right? Personal finances. There but everything else, if it's not a concept, the concept of having a small emergency fund to take care of emergencies is what we're talking about. The concept of a good, solid, strong, zero-based budget is what we're talking about. What that budget looks like, whether that's $2,500 or $3,000 or $2,000 or if it's $1,900, that's up to you. We're building the levels out. Keep somebody said, if you keep I agree with 1,000 is too low, Kenny said. My dad always have my dad told me always have 30,000 cash untouchable. 30,000 is a lot. We're gonna get there, but this is how we're building from there. We're gonna get to saving more, but right now we're just gonna start somewhere. I guarantee you guys, if you are doing a monthly budget and then you all zero based, a unique budget that's zero based, if you do that and you turn around and have 2 to $3,000 in an emergency fund, look, some people have never done that. And if you just accomplish that part of the foundation to start, you're gonna feel a whole lot better about what's to come, about what you can do, about what the possibilities are, right? So you wanna get some of these small goals accomplished, right? First, we're building a foundation. Level lower level 1, right? Sub-basement level 5 down there is the budget. Sub-basement number 4 down there is the actual saving 2 to $3,000 for your initial savings to make sure you're ready, so you ain't running down the payday loan at the strip mall, right, next to the shop, the local clothes store that sells, jewelry and tennis shoes, and you're down at the payday loan place trying to get some money. We don't want that to be you. This is how you prevent it, okay? Let's go to number 3, level 3. Level 3, let's see here. Somebody said I wanna check the chat real quick. Check your sound. Yeah, my sound was going in and out. I think it should be good right now. You guys tell me. If I turn this way, it goes away. If I turn this way, it's still good. I gotta talk into the mic. Let's see here. Winnipeg, Canada in the house. Good to have you, Nigel. Payday loans are crazy interest, ridiculous interest. Listen, they're waiting on you that don't have any money. Let's see. Mike, is the mic is let me know if my mic's still cutting in and out, guys. I think I'm okay right now. If I'm not, let me know. Plugged in everywhere. My viewpoint. Thank you. Jackie said, I followed your principles for about a year. I see the difference in my finance. It takes discipline. My goodness. Thank you for that, Jackie. Yes, big time discipline. Guys, don't forget, smash the like button below and let me know if you can hear me. Give me a thumbs up if you can hear me. I wonder why I'm cutting out. Help me out. Man, my audio is horrible. Audio is pretty bad. Bring that mic back down here. Okay. Appreciate you, Mrs. Moore. Thank you. All right. Next level up. Pay off your debt. Pay off your debt. That's building the strong foundation. Get rid of it. Pay it off. Pay it off. Pay it off. Get it out of your life. Get it out of your life. Be done with it. No more. Be done with the debt. The debt is done. Retire the debt. Get rid of the debt. The debt is killing you. The debt is killing you, right? The debt is killing you. Okay? You gotta get rid of your debt. Not move the debt around like a chess piece, right? Some people say, "Well, should I consolidate this to move that here and to get a better interest?" No. As much as possible, don't rob Peter to pay Paul and don't shift debt from this side of the table to that side of the table. Get it off the table, right? Get the debt off the table. That means pay off the debt, not just the debt on high interest loans. Get rid of as much. Listen, if it's debt on a home, I'm not tripping on that. If it's debt on a piece of rental property, I'm not tripping on that. If it's debt on something that's going up in value, I'm not tripping on that. If it's debt on a car, that's going down in value, that's a problem. If it's debt on your student loans that are 175 or $200,000, and that's a problem. If it's debt on credit cards, that's a problem. If it's debt on medical bills, that's a problem. Get rid of bad debt or the debt that's going down in value. Please. Debt is not your friend unless you're leveraging that debt on something that's increasing in value, appreciating in value, like real estate. Otherwise, debt is not listen, stop financing the refrigerator. Stop financing the mattress. Stop financing things that don't you're wasting money. You're doing the opposite of building wealth, okay? So, another piece to this level, these layers of your foundation that you're building to try to reach financial freedom is to get out of debt. Stop believing this fallacy that you have to be in debt all your life, right? And let while we're on this, let me say this about debt and paying off debt. Paying off debt is hard. Paying off debt is painful. It's difficult. It takes a lot of patience. It's very, very hard. Let's not pretend like this is easy. It's not easy. Let's not pretend that, "Oh, it's no big deal. We could just go right past this piece, this level of the foundation." No, this is the level of the foundation that's gonna have you wanting to quit. This is the level of the foundation that is going to have you wanting to pull your hair out or, give up and say, "Forget it. I wanna live a little bit and take this vacation with everybody else over to the Cayman Islands or Cancun." This is this is the hardest thing you're gonna do for some of you if you have a lot of debt. And listen, I had over $100,000 of debt at one point. I get it. But a lot of times when you hear people talking about, "Oh, yeah, we got out of debt," like they just blow over it like it didn't take nothing but 3 months, and it was no big deal. This is the big, big, big deal, right? I don't wanna minimize this piece right here because this piece right here of getting out of debt is very, very hard, and it can take a very, very long time. Sometimes it can take 5 years, 20 years, 5 years, could take 2 years, could take 1 year, depending on who you are. But you have to a way to get out of the debt because we want you to be doing quarterly net worth statements. And when you do quarterly net worth statements of your own personal finances, you have to figure out assets minus liability. You gotta be seeing those liabilities go down and down and down. You gotta be seeing everything on that debt side, like I call the liabilities, the debt side. You gotta be seeing that go down and down and down over the course of sometimes many, many years, depending on how serious and fast you wanna do it, right? But this is very difficult, and I don't minimize this. Let me say this also, because I said it earlier, but I wanna repeat it, to get more people in here. While you're doing all of everything that I'm telling you to do in terms of building this strong foundation so that you can reach your financial freedom as soon as possible, while you're doing all of this, I need you and I'm not done going over the foundation, right? Well, we've only talked about what? We talked about the first thing was doing a budget. We talked about the second thing was saving, 2 to $3,000 for an initial emergency fund, and now we're talking about getting out of debt. While you're doing all of this, you should be getting the match at your job. If your job has a 401k or 403b, 457, whatever, that gives you a match, you need to be getting that match, the full match, okay? While you're doing all the first 3 things I'm talking about, you need to be getting the match. Now listen, if your job doesn't offer a match, you need to be investing 3 to 5% of your money all the while. I do not believe in stopping investing while you're getting out of debt. No, no, no. You need to be putting a tiny little percentage, 3 to 5% of your money into a brokerage account or getting the company match. Either one, not both. Either one, not both. because some people's jobs don't have a match. That's cool. If it does, they don't have a match, go to I don't care if you go to Charles Schwab, I don't care if you go to Robinhood, I don't care if you go to Vanguard, Fidelity, whatever. Put 3 to 5% of your money into that brokerage account and be investing while you're doing all the things I'm talking about, because that's a part of your foundation too, right? We know you wanna have a little emergency fund. Small emergency fund to start off. We know that you wanna have make sure you're doing a budget. We know that you want to be getting out of debt, but we also want you to be understanding the process of investing, understanding the patience of investing, understand what it means to have your money in an ETF or single stocks if you want, or an index fund, right? What does it mean? What type of temperance does it take as a person, as a human being, to actually be investing money on a regular basis, right? What does that look like? What does it mean? And how is it done? I want you to learn all of that while you're doing the things I'm talking about to build your foundation, because that's a part of building your foundation with money to reach your financial freedom. That's a part of it too, right? Go back to the chat. Oh, by the way, guys, I said it, Imma say it again. Smash the like button for me. Smash the like. Also, if you're not a subscriber, you're catching this for the first time, you gotta do me a favor, subscribe to the channel. But that like button, that thing should be lit up. I can't tell, I haven't looked at my screen to tell how many likes we got, but we gotta have a ton of them. And if you haven't hit it, okay? Let's see, federal government don't have TSP match. What? I mean, the federal government does have a match to its TSP. I forget, is it first it's 100% the first 3%, the next 2%. There's a match with TSP. I just got back from Panama City, Mildred. Miss V is in the house. Good to have you, Miss V. Appreciate you being here. What's up with the audio? Is the audio working or not working? I think we got a few that says, "Hey, Emmanuel, good to have you here." I like to shout out people when they come in, especially for the first time. 'Cause some people have never heard their name on the internet, and I like to give it to you, right? Emmanuel Martinez, you're here. Good to have you. 81 likes, let's get them up. In and out audio. I don't know what it is. It says I got strong, 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 says I got strong, 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 um, connection. So, let me double check this, make sure we're all plugged in up here. I think we are. So, I'm not sure. Alright, I'm working on it, guys. And it's not even low budget over here. This is not low budget. I got some serious equipment over here behind the scenes you can't see, but it might just be my internet connection. Okay, appreciate that. Thanks for letting me know that. Kimmy, I'm gonna work on that. Appreciate you letting me know that, by the way. Cutting in and out. Okay, interesting. Now, over here, you can barely hear. If I put it right here, you ought to be able to hear me a lot better. So I'm not sure. Maybe it's my connection. I thought I had a good connection. Hey, Gatineau, Quebec is in the house. Quebec. Is it Quebec, or Quebec? Quebec. Yes, government has a TSP, my viewpoint said, absolutely. The first 3%, dollar for dollar, the next 2%, 50 cents. That's what I thought. So let's keep rolling, and I'm hoping it says I got a strong internet connection up there in the corner, so, I'm hoping you guys can continue to hear me. If not, this thing will turn into a podcast, and we'll just roll or what have you, right? So, we've done the budget. We're talking about building a foundation. Then we said we're gonna have a small $2,000 to $3,000 emergency fund, and then we said after that, we're gonna try to pay off our debt, which is gonna take a while for some of you. It's gonna take a lot of effort to pay off debt. Everybody don't have $5,000 worth of debt. Some people got 50, 60, 100, 200. Takes a while, and I recognize that that's the hardest part of building a foundation, okay? And I said, all the while that you're doing this, be doing one of 2 things, either getting the match at your job, your 401k, 403b, or be putting 3 to 5% of your money towards investing. Let's go to the next level of building a foundation, and that is once you get out of debt, then you're gonna go ahead and get your full emergency fund together. I say 3, 4, 5 to 6 months of your needs. No, not your overall monthly budget. No. I don't think you need to have an emergency fund that includes getting those massages. Now, massages, I'm sure, can be wonderful. I've never got a massage, but I'm sure they can be helpful and therapeutic, right? But hey, the kicker is it's not a need. The emergency fund is for needs, right? If you every single month, you put, you go out and you once a month, you go buy tickets to the local baseball game and you go and spend $100 a year, that ain't a need, okay? It's in your budget, cool, have it in your budget, but it's not a need. You need to have 3 to 6 months of your needs. Now, if you say, "I don't like that idea, I wanna have 3 to 6 months of my monthly expenses," that's cool too, but I like to say needs. Somebody asked, "How much for the emergency fund?" 3 to 6 months of your needs. If you look at your budget and you say you mark all your needs off and you say, "Up, now let me add all those needs up," that's about 2,000, 3,000. Let's say it's about $3,000 a month, my needs, and I want you to save anywhere from $9,000 to $18,000, 3 months to 6 months. So when you ask how much for an emergency fund depends on how much your monthly what your monthly needs are, okay? I hope that helped you out there. New York City, Robert in the house, good to have you. So let's go, let's keep going. Now we're gonna build the top level of your foundation. This ain't the top, this is the top of the foundation, right? This is the top of your foundation. Now with the top of your foundation, you just simply take and because at this point, you're doing a monthly budget. At this point, you have your emergency money all taken care of. At this point, you got all your little debts out the way. I say little debts, I mean, not the house, not the rental properties, not the commercial property. I'm talking about your student loans, all that stuff. Once all that's done, then you can increase your investing, specifically your investing above and beyond just that little match or just that little 3 to 5% that I told you to get throughout this whole thing. Now you're saying, "Okay, let's bump this thing up." I don't care if it's 10%, 12%, 15%, 20%, 30%. You stretch yourself. I'm not gonna give you a certain amount, right? Imma tell you that that's up to you. Here's the thing, I don't want and I may right now, I don't wanna tell you specifically a percentage amount. Personal finance is personal. I'm gonna tell you to stretch yourself. If that means you could really put in 25% of your money into investing, ETFs, index funds, then do it. But you may be to the point at this point that you have 2 kids that are in high school. One needs a car to get back and forth to school. The other one, it has plays an expensive sport that you really like, and they may get a scholarship for to go to college to do. You may not have 20% of your money to put towards investing. You may only have 10, 12, 13%. That's cool. Again, at some point, this is why you have to be in control of tailoring the foundation that you're building to suit your situation. I can't tell you when you get to the point, put 17% of your money toward I can't tell you that. I'm gonna say stretch more than 10%, 12, 15, 18, 25%, whatever it could be, right? Because the formula I give you for exactly how to reach financial freedom, it needs to be it's soft to an extent, meaning that it needs to be pliable so that it can be applied to you and your situation. Because what works for Mrs. Moore may not work for Mildred, right? Frank's in a whole different situation than Carla, right? You have to understand, guys, that the formula is the formula that you create. You take a blueprint and you put it to your own personal philosophy, your own formula, because I'm trying to empower people with money. And the way you become empowered with money is you develop processes and procedures that work for your situation. You take the blueprint and you change the blueprint here, there. You put a door here, put a door there, a little extra foundation over here, a little extra concrete there, and tailor it to be what's best for you, right? Somebody says, "You mean you can't get a massage?" Hey, I've never gotten a massage, but I heard they are really, really good. So I'm not mad at you if you get them, but you can do however you wanna do, right? Moreno Valley, California. Wes, good to have you here, right? Discomfort helps us move to get the goal accomplished. Absolutely, Pamela. Thanks for saying that. Question, I have about 9 months of needs saved in an emergency fund, high yield savings account. Excellent. Congratulations. What do you suggest I do with the amount over 6 months to keep it liquid? Now, why do you wanna keep it liquid? That's a question you gotta think about, and I'm not mad at you if you do wanna keep it liquid. There's several things you can do. Not sure what your age is, John. You could CD ladder that thing, you could do a lot of different things with that, right? I like to say everything over your 6 months or 9 months, whatever you decide, anything extra invested. Anything extra invested. Brokerage account, and when you say liquid, money there's some money markets that are paying 5% right now, 5.5%, right? If you want it liquid. CD is not gonna be liquid because a CD, you're gonna actually be penalized if you remove the money before the maturity date. So, there could be several places, but there's nothing wrong with a money market that's paying a good percentage, and nothing wrong with saying, "I'm just gonna invest that thing in the market." Let's see here. I have upcoming extra expenses medical card. John, then maybe that's a good place for that money, right? Maybe that money could be the catalyst of your slush fund or your sinking fund for big ticket item that you need or wanna purchase, right? Perhaps, right? You're right. Maddie said, "Come on, I gotta try a massage at least once." Maybe I will, but, I tell you what, one thing I did let me go off topic for a second. One thing I did do one time, about 3 or 4 years ago, maybe 4 or 5 years ago, I got a pedicure, right? But the problem with the pedicure was this: the lady she was going all up on my legs, and I'm saying, "Wait a minute, why you all up on my legs below my knees, right? I thought this was pedicure toes, right? Why are we all over my ankles and stuff and my calves and stuff? What are we doing here?" I was a little bit uncomfortable. So I didn't know, I didn't ask her that, but, I think my daughters or something had got me a pedicure, and I never had a pedicure. I thought pedicure was toes only, stay on the cuticles, right? And she was all up on the calves and massage, and wait a minute, what's going on here? So anyway, that's just a funny little story, right? That happened with the pedicure, but I'm not one of those people that do a lot of pampering of myself, right? So, I've never done all that. Somebody said legs are included in the pedicure. I didn't know that. I did not know that. I did not know legs are included in the pedicure. Um Somebody said, "When you hit 1,000,000, you don't wanna spend because you won't be a millionaire." That's interesting, Clint, never heard that one. But hey, somebody said, "I love to get massages. I am an athlete, so it helps a lot. It helps with stress." Oh, I need to maybe try it. I'm sort of a semi-athlete myself, not professional or anything, but, appreciate that heads up on that. Leg massage with a pedicure are normal. See, I didn't know that. I was a little bit confused. I didn't want touching all on my legs now. Hold up now, slow your roll, is what I said. Okay, so let me go back to building the foundation. You guys got me off on a tangent, but talking about a foundation, I wanna give you a couple other reminders, and what we did, we haven't talked about the walls going up. We'll get to that another date, but during the whole time that you're building this foundation that I talked about, I need you to also, at the very beginning of this thing, to be writing down some goals, right? Some specific goals with time frames attached to them regarding your money. And when I say time frames, I'm talking about action steps as well. So, goal, 3 or 4 action steps. Financial goal, 3 or 4 action steps. Financial goal, 3 or 4 action. steps. The action steps are things you're gonna do every single day, every single week to reach the goal, specific goal. It's measurable. That's why you put a time frame on it and an amount on it, because it's measurable and specific. You would be shocked. You wouldn't be shocked. 99% of the people I've ever talked to about their money, they don't have goals. They don't have them written down. They don't have specific goals. If you're trying to change your trying to change the game for yourself and trying to make sure that you reach financial freedom, you gotta have some written goals, specific goals. As painful as that may be for you, it ain't gotta take very long, right? Just think about it for the next day or 2 or 3, and then this time next week, write them out, and then under each goal, make sure you have specific steps and things you're gonna do every single day to hold yourself accountable to get there. That's it. Also, the whole time, as I said, make sure that you're contributing and getting the match at your job or putting 3 to 5% into a brokerage account and invest that money. Also, a couple other things I like to mention when we're talking about foundation. I mentioned it on my last live, but making sure that you include some type of giving and helping other people in your within your foundation. If you're trying to reach financial freedom, it's a principle. Trust me, the principle don't trust me. I hate saying that, but listen, it's worked for me and millions of others, right? It is a principle, but try to make sure you incorporate some giving in there too. And then also, as far as your foundation, we're only building the foundation. Make sure that somewhere in your goals, in your foundation, how do I say this? I'll say it in a nice way. Make sure somewhere in the goals, while you're building a firm foundation, strong financial foundation to reach your financial freedom, please make sure that you have something in there to increase your skills, okay? So in other words, the the difference between there's a lot of ways I heard somebody put this, but I'll say it my way, however I wanna say however it comes out. But what's gonna make the difference of where you are now and where you are in 5 years is gonna be the amount of skills that you got, right? If you increase your skills in 5 years, you will increase your income 2 and threefold, right? You have to figure out when you're building your firm foundation to reach your financial freedom, you gotta be thinking in the back of your head, income in income increase, and be thinking about ways that you can increase your income and then implementing the certifications, implementing the additional classes, implementing the additional degree, implementing the additional, uh, things that you bring into what you can and cannot do or what you can offer the world. You gotta increase your skills so that in 5 years, you're not making $50,000 a year. In 5 years, you're making $90,000 a year, $150,000 a year. You have to increase your skill. That's a part of building a strong financial foundation, right? Sometimes we leave that piece off, and I don't wanna leave it off. Somebody let me go back to the chat. It's $1,000 on top of principal, sweet spot to pay off mortgage early. Yep. When you say to invest 3 to 5%, just reading the question, I'll put the question up. I'll put it up here. When you say from Benjamin, thanks, Benjamin, for asking the question. I appreciate it. When you say invest 3 to 5% of your salary to a brokerage account, is that percentage of gross or net? It's really percentage of gross, right? In other words, if you make $100,000, $3,000, that's 3%. But let me caution you on that, Benjamin. I'm really saying gross, but guess what? If you wanna say net, feel free. I'm not mad at you if you say, "I wanna say net." You said gross, I wanna say net. That's cool because if you make $100,000, you after you get paid, you might bring home $60,000 a year. You could say 3% of 60,000 as opposed to 3% of 100,000. There is no clear set prescription. The prescription is 3 to 5%. I say gross, you can say net if you want. All you're trying to do here's the reason you're putting that 3 to 5% while you're working on getting out of debt and doing all these other things. The reason is simply because I want you to build up the habit of investing. I want you to build up the understanding. of investing. I want you to build up the patience that it takes to be a good investor, because when you get done with building the foundation and you're putting in 20% of your money towards investing, you already know what it's about because you've been learning the whole 2 or 3, 4 years already about the stock market, about ETFs and index funds, because you've already been doing it. So all I'm trying to do with that 3 to 5% is keep you engaged in the stock market, keep you engaged in the learning, keep you engaged in building your IQ when it comes to investing, so that when you really get to investing, you off the chain now, right? You already spent time understanding, learning, reading the books. That's another thing you wanna be doing this whole time while you're building your foundation, is building up your information, right? Your knowledge base, your understanding of investing, right? Your understanding of personal finances, your understanding of why it's important to manage your money properly. You're managing your financial life, and ultimately this whole foundation is about managing your life, your personal finances on the way to reaching your financial freedom. See, the way you build to reach financial freedom is all the things that you're becoming the person that's reaching financial freedom, right? And part of that is saying, "Okay, I'm taking in new information, learning new stuff, listening to new podcasts, watching new YouTube channels, etcetera." This is about empowerment. It's what it's about, over your money. Right? So great question, Benjamin. Imma leave it up to you if you wanna go gross or net. I say gross, you can say net. You make that decision. That's the other thing. I won't get into that just yet. Leo, deuces to you. I have 3 stages of written goals, short, medium, long term. Love that, Kimmy. Perfect. Let's see here. Somebody said, "Don't mind touching people. You could be a massage person as a side gig. Nothing wrong with that." Good to have you here, Norma. Good to have you in the house. For anyone looking for a bachelor's or master's degree, I highly recommend Western Governor. Okay, good deal. Appreciate that. Norma, do me a favor, Norma. Subscribe to the channel. Smash the like button. She said, I'm a massage therapist and run my own business." Congratulations, Norma. We have a real live massage therapist in the chat. Comments gave me a chuckle. Yeah, yeah, stay on them toes now. Don't be all up on my I just want my toes done. I didn't want all that extra stuff done, you know what I'm saying? Just give me the toes now. I didn't know if police was gonna break through the door and catch me on the local news or something. I didn't ask for a calf massage. I just asked for the toes. Let's see here. Patrick, good to have you in here. Yes, hit that like button. Let me just say this too. I did mention before, and I'll mention it again because I got a bunch of new folks in here. Guys, in the description box, there's some free things, including my schedule, including my link to my one-on-one financial mentoring and coaching, including the 24 Laws of Money. That's a free ebook. There's also, I think I put a couple of videos down there. Just check it all out. I don't have to go all through that. There's also a link to my guys at Mint Mobile, guys and ladies at Mint Mobile, which is my partner on this live stream, so I appreciate them as well. So, let's see here. Question for those of us that are investors, what should we take away from yesterday's Fed meeting? Good question, John. Um, what I took away from it, as I think I said about last week at this time, it's gonna be a while before the Fed lowers those rates. It's gonna be a while. Now, some people say they may increase the rates. They're not increasing the rates, but it could be a while, meaning it may not even happen this year that the Feds decide to go ahead and lower the rate. And I think we got jobs reports coming out tomorrow, from the Bureau of Labor Statistics. So we'll see what happens with that. That's a big driver, right, in terms of Fed's next meeting. I don't think the Fed is gonna be cutting rates before the presidential election. I don't see it happening. So that's just my personal opinion, John. I could be wrong. I stand to be corrected. But that was my biggest takeaway. Appreciate you mentioning that, John. 'Cause normally I talk about that on Thursdays, but I said I've been getting a bunch of questions. I gotta go back to the basics and talk about a foundation on this live. Let's see. I like that Kimmy short-term goals. Yeah, I like that too, Mommy Trader. Short-term goals are awesome. It helps you feel like you got a sense of accomplishment without having to wait 2 or 3 or 4 or 5 years, right? Let's see here. How are people investing in the stock market? Fidelity, Vanguard, etcetera. Sarah, good question. I'm a Vanguard person, but I just opened a Fidelity account, and I'm thinking about a Schwab. You guys put in the chat what you think. I like that question, Sarah. Anybody wanna answer that question? What do you guys use as your primary place of investing? Like I said, I'm primarily Vanguard. Let me know what you guys, think. Drop that in the chat for Sarah. I appreciate it. Hello, Punisher from St. Louis. Good to have you here. The Fed Zach said the Fed is stalling. They don't know what to do. They have 2 jobs. Um, prop up government spending and keep the economy from crashing. Yeah, they are I won't say they're in limbo right now, but they're a little taken aback by the sticky inflation. Inflation sticking around longer than it should have, right? So they're a little taken aback, I'm sure, but the Fed is sophisticated, right? They got a bunch of models out there that we don't know nothing about, right? So, no, they're fine. They understand. I think they have a good idea. Their policy is not the greatest policy in my opinion, but I'm not gonna beat them up over it. Let's see here, somebody said Laura, good to have you, Laura. Somebody said Vanguard. Vanguard is good. Fidelity, Schwab, Ally. Ally? I use Fidelities. A couple people use Fidelity, quite a bit. They got a lot of Fidelities, right? A lot of Fidelities, right? RB and Interactive IB. So Mommy Trader use IB, Interactive Brokers, huh? Interesting. Heard some good things about IB. Haven't used them, right? Some of these companies have actually reached out to me to want me to partner with them on my videos, right? I get emails every day, "Hey, can we do this? Can I do that?" Right? And I don't put a lot of stock in them. I don't listen to them. Let's see, I'm primarily Fidelity with a small SoFi broker. Okay, so we got a lot of Fidelity though. Fidelity must be pretty good. A lot of folks go with that. Hey, R2K from Long Island, good to have you here. Okay, Sarah, hope that helped. Excellent, fantastic. So listen, guys, we're talking about exactly what to do to reach your financial freedom, right? This is the first piece. This is really the first piece. There's another whole piece that I'll talk about in a week. This is the this is the first piece, though. Excuse me. This is the first piece because this is the bottom. When I say bottom, it's building the strong foundation. And you notice something, guys, that I didn't really spend too much time on, and that's side hustles and side gigs. There's a reason why I don't focus most of this foundation to reach your financial freedom. There's a reason I don't talk about side hustles, side gigs so much. It's because who cares about a side hustle and a side gig where you're bringing in a whole bunch of money, but you're adding the money to a weak foundation, to poor behaviors, right? The foundation is first. Then we can go out and try to get some side hustles and try to get some side gigs and try to increase our income and do all that. All that is cool, and I want you to do that. But I want you to focus on making sure you got the basics down. What would I look like coming in here telling you this is what invest here, invest there, or not invest, sorry, side hustle this and side hustle that and side hustle this, and we haven't even talked about the basics, right? So the focus at first is the foundation. We can get to the side hustles. We'll have videos on that too, right? And I have videos on that too, and we'll do more. But we gotta do the basics, guys. I don't want you putting good money on top of bad habits. Why? Good money on top of impatience. Good money on top of lack of discipline. Good money on top of poor behavior. Good money on top of I ain't even got a budget written down, but I'm getting a whole bunch more money from my side hustle. Listen, if you can't properly manage what you already have, don't go add a whole bunch of money to bad management. And this is what people love to do. They think the key to them building wealth is getting a whole bunch of more money. But I'm telling you, the key to you building wealth is managing what you already have well. That's what the foundation is all about. It's about managing what you already have and building on what you got in front of you first, right? I hope that makes sense to you guys because that's the first part. That's exactly how or exactly what to do to reach ultimately your financial freedom. Go back to the questions real quick. Got a Schwab. We finally got a Schwab in the house. Frank, he invested on a platform called Schwab. Let's see. Appreciate you, Jared. Thank you so much. Strong foundation is needed. Let's see here. Get upgrade from skill sets. Yes, that's the one thing you can do is to build on your skill set, right? That's what you want to do in the process of building a foundation, right? They can't take away your skills from you if you get the right skills. Okay. Maryland, we have a bunch of folks. Let me see if I back up a little bit. Yeah, my voice has been sort of in and out, guys. I apologize tremendously for these audio issues, and I only seem to have them on Thursdays. I don't know what they are. Maybe I'm too close to maybe my connection is strong, though. I got a really strong connection, so I'm not really sure. Um, yes, mommy trader, management is the key. That's why when you hear janitors and secretaries who have millions of dollars, absolutely, I totally 100% agree. That's the kicker. It don't take a lot of money to reach financial freedom, right? It takes money, right, ultimately, but it takes a lot of other things, intangible, that a lot of people just don't have. A lot of people are disillusioned, right? A lot of people think that I make $50,000 a year, my life will be so much better when I can make $60,000 a year, but your life gets better when you manage $50,000 really, really well. Your life gets better. Sure, we all wanna make a little bit more money. I don't wanna discount that because it's important to make a little extra money, but there's people that make $200,000 a year, don't keep any of it because they spend it all. There's people that make $50,000 a year, and they know how to keep 10,000 of that 50. Who's better off? The person making $50,000 that keeps 10,000 or the person making 200,000 living it up but has no money at the end of the day to show for it? Well, in 10 years, the person making $50,000, they'll have 100,000. The person making 200,000 in 10 years, it's not always making more money. A lot of times it's managing what you currently have in front of you very, very properly, being a good, wise steward over your personal finances. That can make all the difference. And when you get to the point when you're doing that, you're actually getting to the point where you can reach financial freedom. Because it doesn't matter if you bring home $200,000 a year, you spend all of it, what good is that? You're not reaching financial freedom. You reach financial freedom by doing the small things well when it comes to building a strong foundation with money over time, with patience, with discipline. That's how you reach financial freedom. Ash, good to have you. Juicy Work Show, shout out a super chat. Thank you so much. Appreciate you. And Juicy Work, I know you weren't here. Were you here the whole time? Because I hadn't heard from you, but I appreciate you being here and thank you so much for the super chat. Now listen, guys, do me a favor, smash the like button, share this video with somebody. If you're not a subscriber, please consider subscribing. My whole goal on this channel is to empower people. The best way I know how to empower you with money is to help you build a strong personal financial foundation with your money. So I hope this was helpful for you. I appreciate you guys more than you know for building, for helping me build, for helping the channel grow, for answering people's questions in the chat, helping out other people, right? Get what they need and what they want in the chat. You gotta do me a favor and hit the like button, and please check out some of the free stuff that I have in the description box here on YouTube. And if you're not on YouTube, go over and check out that description box on YouTube. Now listen, with that said, I'm gonna jump off here. As I always say, the best person who's gonna take care of that old you is the young you that's built up a strong foundation with money and is on the way to reaching financial freedom. Guys, do me a favor. Take good care of yourself and take care of other people. Until the next video, I'm out. Peace.